Welcome everyone to HueFin, also known as HueFin News. Today is May the 22nd, 2021. You guys can see we're going to talk about OCGN today on this video. Before I go into that, before I tell you all where we're expecting this market price to go in OCGN, make sure if you all appreciate these videos, hit the like button, share, subscribe, and also join this team, join this community, because we're going to give you information that you may not want to hear, but still you need to hear it anyway. We're not here to get any of your praises. We're simply here to tell you where the market is anticipated to go, just so that you can have a heads up. And you can't say that no one didn't tell me that the market was going to go here, because we're going to give you the news all based off the price chart. That's it. If the market in OCGN was going to go higher, we'll tell you that. If the market in OCGN is going to go lower, we'll tell you that as well. You guys can tell that's what we did on our last video, which was on April the 25th. We told you that the market price in OCGN was going to go lower in price, and that is precisely what the market has done, even though from the outset the market did go higher, right? We're going to talk about that, and then we're going to talk about a very confusing chart, all right, and how confusion cannot give you the advantage in the market, right? So now, if you like all of that, like I told you earlier, hit the like button, share, subscribe, join this team, join this community, because we're here to anticipate price movement so that we can win in the market. So now let's talk about this confusing chart real quick, and it is by Madrid. Okay, you guys can tell that he has a lot going on this chart. It is a lot going on, and the only thing that you want to know is, okay, where in the world is price going to go, right? That's the only thing we are worried about. Everyone is simply worried about one thing, and that is the price, period. And when you show forth all of these massive types of indicators, it shows that you have no idea what you're talking about. It shows you that you have no idea as to where you're anticipating price to go. Now, I will give Madrid kudos that it's a nice chart. It looks real nice, but attractiveness does not put money in your pocket. Okay. You guys can see slanted head and shoulders, weak momentum, and lower volume. So listen to all of this jargon that I am spewing on this video when it comes to using technical analysis. So I'm here to tell you, we don't use technical analysis here. We use language analysis, right? Two totally different things. Technical analysis causes confusion. Language analysis does not. He has all of this going on in this price chart only to identify a head and shoulder pattern, right? Head and shoulder simply means that the market hit restriction 3 times at one particular price level. That's it. And for Apple's case, it did it right there around $140. That's where the market hit 3 times and failed every time. So why does he have all of these spaghetti lines? Like, what's the purpose of that? What's the purpose of these neon colors? And I don't even know what this indicator is. What is that, like a heat map or something? That's ridiculous. All of these indicators will have to come in green to let you know when to pull the trigger, as to know whether or not the market's going to go lower, whether it's going to go higher. All of them. Because what if one of these indicators doesn't pinpoint that the market in Apples are going to go lower? Do you wait? Do all indicators need to come in alignment to say, yes, now the market is ready to go lower? Like, this is ridiculous. You all need to be careful of seeing people or charts this way, because it gives you no advantage. Looking at all of this information on this chart, you're no better off as to knowing where price is going to go. No, not one iota are you better off. Let's see what he wrote. All right, let's take the time out to see what he wrote in regards to this chart. So he wrote, there's a slanted head and shoulders pattern forming. He already identified it. It's not forming, it already has been created. It hit the market restriction 3 times. The neckline doesn't have to be perfect to call it a head and shoulders, right? Now listen, the left shoulder has momentum and volume. Now you have to define these terms. What in the world is momentum? How can you define it? And what volume are you talking about? The head shows a momentum divergence. This is that technical jargon again. What in the world is momentum divergence? Where do you see it at? Where do you identify it and say that it is momentum divergence? And a fall in volume. What volume? What day are you talking about? What area are you looking at? And the right shoulder made it to the resistance level of the left shoulder. So you had to identify all of these things that he's talking about or that he's written on this post. The left shoulder has momentum volume, so you had to identify that first. The head shows momentum divergence, and the fall in volume, you had to notify, you had to see that next. And then the right shoulder made it to the resistance level of the left shoulder, which you got to identify that. With very weak momentum and a very reduced volume. You had to identify all of that for what? Just to see the market go down? Then he writes, this market may still try. So even in identifying all of that, you still can see the market trend from consolidation at 120 to try to take out a top level 140. So you're anticipating the market to go lower, but you write in this post that the market can still make another movement higher. Come on. All of this causes another confusion. When you see people speak, when you see people write this, they have no idea what they're talking about, right? If you think the market in Apple is still going to go higher, then play that. Say the market is anticipated to go higher. Drop the prediction. Tell me how high you think it's going to go. When you say may still try, that means that you're still playing both sides of the field. You're trying to tell me that the market in Apple is going to go lower, but then you're trying to leave yourself a way out to say that the market can still go higher. All of these indicators doesn't matter then when you're trying to play both sides of the game. Now, the market may still try another short trend from the consolidational point at 120 to try to take out the top level at 140, which is a short-term trade I'm aiming at. If the support at 115 is broken, then we'll have a confirmation of a head and shoulders pattern. Would make sense since this is still in a bull mode and will test support from the bull ribbon at 100. This way, it makes a correction that will give it room to test 140, not from 120, but from 100. Come on. That's ridiculous. He haven't even identified none of these indicators at the bottom of this chart in this post. So he's literally telling us, based off what he wrote, that the market can go either way. Appreciate that. This is why you need to utilize clean charts. This is why it's important that you make sure that you do not add any more confusion than is what is needed in order to get ideas of where price is going to go. We did our price prediction in OCGN right here on April the 23rd, right? Or April the 25th. And we played a weakness here. We told you that we were expecting the market in OCGN to go lower. Now, initially it didn't, right? There was a lot of hope, a lot of demand, a lot of, hype going into this particular stock. And you guys can see that it has completely lost steam. The market could not maintain that strength. And we even identified this restriction point around $13 or $14. Now we saw one day to where the market broke out of that area restriction, but immediately the next day we came right back to it. That told us that the market in OCGN is not as strong as what many people think. Many people were thinking that this market was going to exceedingly go high in price. And as you all can see, we haven't done it. We came right back to where we expected it to go. And not just on one day, we've seen the market in OCGN trade here for a while. So at least 17.86% profitability was done in that prediction, right? And for those of you who think that we got stopped out, we don't use stop losses in our analysis. We don't try to give that much information to the trap, because you use stop losses, then he uses that against you, right? Because if we would have placed a stop loss right here at $11, we would have been stopped out, but our overall prediction of the market in OCGN going lower was still right. That is why we don't use stop losses, because we knew that the market in OCGN was still weak. Now, if we would have placed a stop loss, we would have lost the trade. But when you don't use a stop loss and you can read the charts, you already know that you're still in a good position, even when the market goes higher, right? So now, let's go ahead and get rid of that. 17.86% was had in the market right there on May the 7th. We did our prediction on April the 25th. Good call, right? So now, you guys can tell that the market in OCGN is not doing too much. We're either seeing this market trade sideways, or we're going to see the market go higher in price, right? So let's see. I wanted to show you all that this is the upward trend that is being seen into the market in OCGN, right? So now, either the market is going to come down and test the support area of $8, or we're going to test it right here around $7. That is where we're expecting the market to try to come through and hold some support. Okay. Now down here is where the market support really is in oxygen. So this is the sideways trading action that we're getting into the market in oxygen. We're bouncing in between these two lines, right? That's one way the market is moving. The second way is we can see the market test this ascending line. So let's check out the charts on a different time frame real quick to see what's what, okay? Because we're still here seeing the market weakness in oxygen. Don't be fooled. This market here in oxygen is still weak. $8 to $7 is where we're expecting the market to try to come through and show us some support, okay? The 2-day time frame, we're still seeing weakness into the market in oxygen. Even here on the 3-day, albeit the market is not extremely weak, there is weakness here though. 5-day time frame, the market here in oxygen is still giving us weakness. The market is unable to actually try to continue to see higher price movement based off what we're seeing into the market here. Even on the weekly time frame, the market in oxygen is trying to go higher in price. The last 2 weeks, we've tried to see the market in oxygen break out, try to go higher. But each week, the market continually got rejected, which lets us know that the overall market movement is still one of lower prices. 2-week time frame, seeing the same thing. This market in oxygen is still giving us some weakness, okay? But now I don't want you all to think that I'm telling you that this market in oxygen is going to crash. You know, I'm just telling you that the market is still anticipated to give us a little bit of weakness. All right, so let's do this real quick. We've already identified where we're expecting the market to try to come in and test support. First area is $8, which gives us around 7% movement to the downside. The other area is going to be, I would say, around $7.50 to $7. I'm actually going to bring it up there towards $7.50. I like that one better for oxygen. All right. So now you guys can still tell, even though we're playing the weakness into the market in oxygen, the market is still traded within our trading channel, and it is still trading alongside this ascending line, right? So we haven't broken either of those directions. The market can still trade sideways, and the market in oxygen can still go high in price. But in the near term, we're playing the weakness though. Okay. So I'm going to get rid of this trading channel first, because we're expecting the market to try to test that ascending line. But if we do see the market come through and touch, you know, $7.50, $7.33, then we understand that the trend sideways is more involved than this upward pattern that we're trying to follow in oxygen. All right. So this is it. This is how simple it is. We're telling you where we're expecting the market price to go, and we just sit back and let the trap move the market. Would you rather see this? Would you rather see this? To give you an idea as to where price is going to go. Now, you may rather see this one because it looks nice, but it doesn't help you out to tell you where price is going to go. This one will. So drop the comment in the comment section. Let me know where you all think the market in oxygen is going to go. And I will say, give me your price prediction in the next 3 weeks. You know, tell me where you think price is headed in oxygen. All right. Drop the comment in the comment section. Let me know as to where you think the market price in oxygen is headed. And that's it. Make sure you maintain a profitability. And as always, trade different.